Okay, welcome to Transform with Greg Carson. We are here today with Arthur Hayes. Just before we get started, I'm just going to say that any views expressed here are my personal views and his personal views, and should not form a basis for making investment decisions or construct recommendations or advice to engage investment transactions. But instead, it's a interview with a good friend of mine. I'm welcoming the legendary Arthur Hayes, one of the earliest luminaries in the Bitcoin and crypto scene, founder of BitMEX and 100X, and a regular contributor to the macro discussion and the meme wars on Twitter and now X as well, and someone I greatly admire. So I'd say he has one of the best macro and crypto article series on Medium on a regular basis, which are very predictive, judgmental on the industry, and very interesting in general. So welcome, Arthur. Good to see
Thanks
you
for
again.
having me, Greg. Nice to
So
see
I guess
you in your digs.
Yeah, it's great to see you here. I think we just saw each other on the slopes a couple weeks ago. So, and
Yes.
now you have, we had a great article out a couple weeks ago, and then like last night you had another one. But in general, we know that you're into yoga, skiing, playing squash, investing, and just general shenanigans around the world. So, why don't you give us a little just quick introduction of who you are and your background for those that are new to you, and let's hear your background.
Sure. So I was born in a small town called Buffalo, New York. Definitely not New York City. I'm basically half Canadian, really close to the border. I grew up there. I went to University of Pennsylvania, the Wharton School of Business for undergrad, studying finance. I probably could have gotten a minor in Chinese, but I never really finished that. And then I moved out to Hong Kong in 2008, working for Deutsche Bank on the Delta One derivatives trading desk. And I eventually became the lead market maker for the ETF product that they brought out from Europe to Asia. I did 3 years there. Then I went to Citibank, did the same thing in Hong Kong. Best thing that ever happened to me, I got fired from Citi in 2013, discovered the Bitcoin Satoshi white paper, and that was the start of my journey into the crypto ecosystem. I started doing arbitrage in 2013, moving money between China and the rest of the world on crypto exchanges, and then decided that I wanted to start my own derivatives platform called BitMEX. I found my other two co-founders, Ben Delo and Sam Reed, the two smart people who do the technology. We came together in 2014 and started building this platform. I'd say probably our biggest claim to fame is the invention of the Bitcoin US dollar perpetual swap, which has now been basically perps. It is the most traded instrument in crypto globally. Every single major decentralized and centralized exchange uses the product that we created back in 2016. Subsequent to BitMEX, which I'm still on the board of and own a significant percentage of, I started my own Family Office Maelstrom, and we do a mix of early stage token deals, so like shitcoining. I do a bunch of liquid trading, and I pontificate on social media, Medium, and Substack, and generally just play a lot of sports.
Excellent. And what kind of stuff do you guys invest in? Like, what are some of the investments you've made in the past, and what are you looking at this year, like generally?
So on the early stage token deals, we love tokens. I fucking hate equity. I have a very high liquidity preference. I want my money like yesterday. And we love this ability for really talented founders to skip the whole IPO bullshit and go straight to the people with new products that may or may not work. We're very big on decentralized infrastructure. So we've invested heavily in staking, restaking. So companies like EtherFi, Obol, Init, Ion. We're big on decentralized exchanges. We will be announcing a few partnerships with some liquidity providers and some new perp dexes in the next coming weeks. And in general, that was sort of our bear market stuff. now that we're moving into more of the early stages of the bull market, I think we'll probably be investing in a lot more consumer Web3 stuff that's harder to build. But if you have to catch the narrative right, you might be able to exit your position at a profit before everything goes to shit in a few years.
Catch it right in the wave, which I guess is your claim to fame is predicting things with some accuracy. I think
Some accuracy is very key. Hopefully, I bet bigger on the things I am more confident on, and then I can lose 99% of the time. And as long as I don't make bet a lot of money, it doesn't fucking matter.
Yeah, you're famous for coming out with great predictions just after you put everything put all your trades on, and then you tell everybody how you're thinking. And I think everyone loves that kind of like this like communication you have with the market, which most traders and most macro guys don't have.
Yeah, it's fun.
What is your like what is it that makes you most excited about like right now in the markets and in society? Like basically, I think it goes beyond just markets, right? Everything around us is affecting the market. So, and that's kind of one of my favorite things about your articles is you tie the real traditional TradFi analysis of macro and decisions by the governments with Bitcoin and with everything that we're doing. So, how would you like encapsulate the situation we're in, like January 2024? What is your
So, I mean, I know we all think that we're special and unique, but the situation that we're in, which is an over-indebted empire, is nothing new. Every single major empire that's ever existed in human civilization has gotten to this point where they've exhausted all the easy productivity gains and then resorted to printing money to cover the difference. And so the American empire of the past 8 years, nothing is different. The only thing that's different this time, which is why it's so exciting to be in crypto, is for the first time in human history, we have a way as the people who are not the elites running everything to escape the eventual downfall or changing of the global architecture. So previously you had gold, but it's really, really hard to move gold. It's fucking heavy. It's very obvious that you have it. You usually have to employ some either, banks
security?
or security guards, somebody with guns or clubs or whatever
And the
to
government
protect your
usually has
shit.
bigger clubs and bigger guns.
Exactly. So that's easy for them to take your stuff. But now with crypto and especially Bitcoin, I can store my private key in my mind. I can remember a 24 mnemonic word to mnemonic phrase and unlock my Bitcoin wallet anywhere where I have an internet connected device. So I can carry $1 worth of assets or $1 trillion worth of assets in my brain. And nobody knows how much money I have or don't have, which is the first time in human history we are able to escape the eventual change in the way that the global economy works. And so because we have this ability to finally escape and to separate money from government, we're creating this entirely new financial architecture that is grassroots level from the ground up. And it's so interesting to see all these very, very smart people around the world who literally all you have to do is read the white paper, understand a bit of code, the economics,
Buy some.
and you can create your own exchange, your own whatever you want to create, political system, voting system, decentralized autonomous organization. Like anybody can do this. It doesn't cost you that much money. It's literally just time and effort. And now you can be part of a new financial system. No time else in our history of humans has the individual person been able to affect such massive change from a one-to-many perspective based on, the virality of the internet and, data moving this way. So that's why this is super interesting. It's a similar setup, but a different outcome for the average person who wants to do something different with their lives.
And how do you think that's affecting all the people in power? The fact that this
Well, obviously
exists.
they don't like it. That's and we've seen that over the past 15 years that Bitcoin and crypto has been in existence. First,
Yeah.
it was too small and it was ignored. Now we've gotten to the situation where the markets are breaking down. There is this escape valve. Bitcoin is proving that it's very responsive to the inverse of policy of global central banks and governments. In that, okay, if you want to print more money, well, then this thing is going to go parabolic, and it's a smoke alarm. It's very visible. It's globally traded, and they can't shut it down. And so now we've gotten to the situation where Pax Americana has now allowed a Bitcoin ETF, which is to allow the largest TradFi managers to take the take what Bitcoin is, convert it into a financialized asset, and hopefully convince people who just want to invest fiat to earn more fiat that, okay, you don't really need to own Bitcoin. Here's this ETF thing, put your money in here, and it may go up, may go down, but at least I know that your dollars, euros, yen, yuan, whatever, is still safely within the system. And then if I, the government or central bank, need to find a pot of money to debase, it's still sitting right here and it hasn't escaped. And so that's why I think starting in June of this year or of last year, the SEC finally all of a sudden decided that BlackRock was the suitable, BlackRock, Fidelity, and all the other people who got their licenses or their approvals to start trading ETFs, all of a sudden could start trading these products 6 months later, where the Winklevi, I think, launched their first application in 2013, right? And obviously in Hong Kong, they're
We need to
following.
acknowledge them as pioneers.
Yeah, good for them. They spent, I don't know how, umpteen hundreds of millions of dollars probably in legal fees trying to get this thing to the Hong Kong SFC to get a spot Bitcoin ETF. And I assume that in a few months, there'll be one there listed as well. So if you're Chinese or in that part of the world, there'll be a government-sponsored vehicle for you to invest in Bitcoin as well.
Yeah, and I guess, and I think we heard Fink mention that he actually mentioned that Bitcoin was a flight to safety publicly, didn't he?
I think so. He has all the talking points. The only thing is that he doesn't tell you is that what you're investing in is not Bitcoin. It's a derivative. It's a financial product, which is fine. There's nothing wrong with that. If that's what you want, then there it is for you.
But are they're required to keep 1-to-1 Bitcoin in their ETF, or is that not the case?
I haven't read the prospectus. I don't know if they're allowed to hypothecate the Bitcoin. I think I just saw on Twitter one of the Bitcoin managers posted their public address, so you can track. Okay, the Bitcoin is there. I'm assuming that all the other managers will have to do that at some point. I hope.
Yeah.
But yeah, I don't know. I haven't read that deeply into the prospectus.
Oh, excellent. And I guess the most important question with your analysis is, what exactly is a whiff hat?
Oh, I mean, I didn't really know until I was on Twitter. I just saw this like goofy looking hat and applied everything, and I looked up the token whiff. Motherfucking coin is like 156 on like CoinGecko market cap.
No way.
So I love dog money. I think it's a big fuck you to TradFi that you're going to print all this money and we're going to trade these like doggy coin JPEGs. So I think whiff hat is going to be this cycle's, first was Dogecoin, then it was Bonk, and now we got whiff hat.
Yeah, you mentioned it. You had a whole article on January 15th about the ETF whiff hat. So I guess what does the whiff hat represent?
I think it's just this cute dog with a hat on it. I think.
Oh, okay.
I don't even know. I don't fucking know. It's like, it's a shit coin. Just buy it or sell it. I don't know.
So macro wise, do you separate? Clearly separate ETF. You separate Bitcoin from the rest of crypto in this kind of escape from the monetary system, or is crypto somehow an important part of the monetary escape valve also? And how would those three, the fiat world, the crypto world, the Bitcoin world, how do they relate, or how do they overlap?
So Bitcoin is just money in my lexicon of crypto. I know that the ETH maxis probably disagree with me, but I think that Bitcoin is the best form of cryptographic money that we have created thus far. And that is because the Bitcoin community prioritizes moneyness over everything else. And so obviously the Bitcoin blockchain could do a lot more things if certain Bitcoin improvement protocols were activated, right? But there's obviously security concerns, opening up the attack vector. And so everyone's very conservative. We want Bitcoin to be the hardest money ever created, which is fine. And it is. It has the largest market cap of any crypto. And of course, just because you have money, you need a whole financial system as well. So we have Ethereum. We have all these other layer one blockchains that are trying to be the decentralized version of the internet. Now, they might have tokens that are deflationary in terms of issuance. The price might go parabolic, but at the end of the day, these ecosystems will prioritize being a computer versus being money. And Ethereum is a great example. Back in 2016, when the DAO hack happened, and for those who don't know, basically there was this proto VC fund launched by a bunch of grifters, and they they raised, I think, 150 million US dollars worth of ETH at the time. Like, I think the largest crowdfunding project ever in human history at the time. And of course, their code was dog shit. and somebody was able to execute it in a different way than what they thought, and essentially siphon off a large portion of that money. And so, the Ethereum community was faced with a very crucial decision point. Do we agree to allow the miners to roll back the blockchain to a state before this DAO thing happened, and thus everybody keeps their ETH? Or do we say, you know what, a transaction is a transaction, this immutable, you lost money, sour grapes, so what, and we move forward.
Right.
So the community chose, we think that to increase adoption of our decentralized computer, we should make sure everybody gets their money back. And so they rolled back the blockchain, and essentially we created Ethereum and Ethereum Classic. Ethereum Classic is a chain where the DAO hack was allowed to persist. And so very clearly the community values the computer more than the money, which is completely fine. This is the point. The community comes together and decides on how they want to run these systems. And so we have Bitcoin as money, and then we have a proto new financial system, decentralized finance, with Ethereum as the largest layer one. And obviously there's many other layer ones like Solana, Cardano, Avalanche, and all these other coins and ecosystems that are trying to compete on the same metric of, I am the best decentralized computer, and therefore you should build applications on top of my network.
Right. And do you think that Bitcoin will eventually become one of those as it increases functionality, like with Taproot and potential bit?
It could. I guess again, it's up to the community, but I'd say that the intense conservatism of the Bitcoin community with regards to security and moneyness, I think, is going to hamper its ability to be as flexible as some of the other blockchains, which are much more willing to suffer issues on their networks if it furthers the goal of being a more widely used decentralized computer.
Yeah, it feels like actually a good position because there's no one else doing anything close to that. So it's important considering the instability of everything else on the planet.
Yeah.
So in your last article, you mentioned this BTFP. So I want to go a little bit into your macro analysis and the stuff that probably is over the head of many people that read your stuff. I mean, you actually have a really nice way of presenting things and making them super clear, which is why it's great to have you on here. This is like part of like a 3-part series I want to do on macro, where we get people to help explain it to like the everyday investor or family office or allocator. Like, how does this all affect? And it's awesome how your analysis is matching, is bringing the Fed actions and the government actions, both China, US, everywhere, into like actual, how does it affect Bitcoin and how does Bitcoin affect it? So just start with what's the BTFP and let's go from there.
Yeah. So the Bank Term Funding Program essentially was a government bailout of the non too big to fail banking sector in the US that was affected on, I think, March 11th, 2023. So why did it get to that point? So back at 2008.
Wait, it started March 11th, 2023. It
Yes,
started, or
that's
ended?
when the program was announced Sunday night or whenever it was by Janet Yellen and Fed Chairman Powell. They created this bailout, but the problem started way earlier. So then, in 2008, as with every single banking crisis, the banks needed a bailout, and therefore the quid pro quo with the politicians was, okay, we're going to get regulated more. And so what they did was they created, in the US at least, 8 super banks. So JP Morgan is one, Citibank is one, Wells Fargo, I think Wachovia, and a few other banks. So there's 8 of them. So these 8 banks were designated too big to fail and were given a government deposit guarantee, meaning however much they fuck up, doesn't matter. If you're a depositor in those banks, the government will come to your rescue and make sure that you are made whole, which is different than every other bank, which has a $250,000 cap, the FDIC insurance. So in every other country has a similar sort of scheme. There's usually banks that are essentially government guaranteed and private banks that are not.
So the banks that are government guaranteed is actually saying 100% backing for all those 8 banks.
No, I'll get there. But we have to start with the 8 too big to fail banks and why they're special and why there's a problem with the rest of them. So they're fine. They have a government guarantee. They can do whatever the fuck they want. Jamie Dimon can piss money away, do whatever he wants. He's golden boy. But there's every other bank in the United States, and there's a few thousand of them. They have to actually compete in a real market and try to make money and not have the government bail them out. And so what happened was, fast forward, we have 15 years of QE, and we get to the COVID situation. And what happens? We lock everybody in the house because we don't want the boomers to die because they're fat and old. And and then the government
Truth.
says,
He
and at
speaks
least in
the
the
truth.
US, hey, let's print a bunch of money. They printed the most money since World War II to make sure that nobody fucking goes crazy while we lock them in their houses. And we're going to do helicopter money. We give it up to everybody. So what does that mean in traditional economics terms? So the government borrowed a bunch of money, and then they just moved it onto the banking balance sheets of individual Americans. So what individual Americans do? Obviously, a lot of people still have their jobs. They just worked from home, and they just started buying stuff, or they just kept the deposits in the banking system. So all of a sudden, all these small, medium banks that are not too big to fail get a massive influx of deposits from ordinary Americans who get all these stimulus checks. And so what do? They're a bank. They need to lend this money out to somebody, right? Now, obviously, this is the middle of the pandemic. Do you want to as a bank lending officer, do you want to take a lot of risk? Of course not. You want to lend to somebody who's perceived to be very, very safe. And you want to lend into a product that gets you the best risk-weighted asset, which is essentially a banking regulation aimed at how much capital you have to put against an asset that you hold on your balance sheet. Now, obviously, because the governments write the rules and they want you to invest in their bonds, they're going to make it very favorable for banks to invest in government bonds. And this is not an American thing, it's a global thing. And so in America, if you invest in a US Treasury bond or a mortgage-backed security, you essentially can do it in infinite leverage. And so what do the banks do? Okay, well, I get paid. I can post the least amount of collateral in government bonds. I'm lending to the U.S. government, number one government in the world, super, super safe, can't default in its own currency because they can print it. And I'm paying zero onto my deposits because everyone just got free money from the government. And I'm making 2.5% on, mortgage-backed securities and treasuries. So I park, trillions of dollars into government bonds, which was great because the government needed to print all this money to pay for these stimulus programs, which the banks then proceeded to buy the debt. So it's a big circle, which is fine. This argument works. The banks have 2 to 3% net interest margins. Everybody gets a big bonus. Everybody's happy. The government's happy because the banks are now financing their money printing exercise. And so this is all great until inflation shows up. And so inflation shows up, and guess what happened? Biden and Janet Yellen sit Powell down in their office, and they say, you got to get inflation under control because otherwise we're not going to get reelected. Very sensible political thing to do. So, Mr. Powell goes and raises rates at the fastest rate since the 1980s, starting in March of 2022, and reached a high of 5.5% of the Fed funds rate, whatever it is right now. And so starting in 2023, all the depositors at all these banks are like, hold on a second. Fed rates 4 or 5%, whatever it is. I'm getting zero. Why don't I just go on my phone, click, 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 and move my money from my bank that yields me zero into a money market fund that yields me 4.5%. And that's what they started doing, starting in late 2022, going into early 23. And these small, non too big to fail banks who don't have a government deposit guarantee started seeing deposits just gush out of them. And it started with Silvergate. Now, Silvergate was more of a crypto specific issue. FTX, the stink from FTX, their largest depositor, obviously complete fugazi operation. And everyone was like, oh, fuck, well, I don't want to be in this bank. Get my money out of here. So they withdrew all this money. So what happens? I'm a bank. I've invested in a bunch of U.S. Treasury bonds at 2.5% back in 2021. Now the 10-year is at 4%, right? And if you do your bond math, it's a non-linear move in terms of losses. So you're down 20, 30%, whatever it is, on your bond. So I'm underwater on my assets, and now my depositors want to take their money out and move it to a higher yielding deposit account. So I have two options. Either I increase my deposit rates to match the Fed funds rate, but I can't do that because then I go into a negative net interest margin situation because I'm only earning 2.5 on my treasury bonds, but now I'm paying 4.5, 5 to keep my deposit base. So that's a bad situation. But or then my depositors leave and I have to sell these bonds and crystallize a loss. And because of the funny accounting that banks are allowed to do, if I'm underwater on my bonds and I elect that I held them to maturity, they don't impact my solvency ratio. But as soon as I recognize that loss by selling this bond, all of a sudden the regulator's like, well, hold on a second. You are an insolvent bank and I need to take you over. And so this is the situation that banks like Silvergate, subsequently Silicon Valley Bank, subsequent First Republic, Signature, these are some of the 4 banks that failed, were taken over. That's what happened. And so in the span of 2 weeks, you had 3 major U.S. banks go bankrupt because of this position that they're in versus an asset base that yields too little and is underwater on a mark-to-market basis versus depositors doing the economically smart thing to do, which is I want to earn more money if the Fed's paying me 5.5%, 4.5%. And so this is a banking-wide situation. It's not just isolated 3 banks. And the market starts crashing in mid-March of 2023. 2 banks fail over the weekend. And Yellen and Powell know if they let the market open on Monday without something, that this could go, up to a bank close to the level of a too big to fail operation. And so all of a sudden the bank term funding program comes into existence. And what does it do? It says if you hold a U.S. Treasury bond or a mortgage-backed security, we don't care what the price of it is in the market. We'll give you par, which is essentially 100% value of it, in cash. So you give us the bonds, we give you the cash, you can give the cash to your depositors, and they can go and do whatever they want with it. Great, fine. So that situation, and they, because it's essentially a bank bailout, and the total value of treasuries and mortgage-backed securities on the U.S. banking balance sheet is about $4 trillion. I argued that it's essentially a $4 trillion money printing exercise. Obviously, it's more backloaded than front-loaded, but it's there. The market, being Bitcoin, recognizes immediately. As soon as they announced this program, I think Bitcoin was trading like 22,000, rally like 20, 30% into the mid 20,000s on the announcement that Sunday. So Bitcoin was clearly saying this is inflationary. The markets all recovered as soon as they launched this program, and bond spreads decline, all the good things that they want when they do a banking bailout. And the banks stopped failing. I think one more bank failed after that because First Republic, but essentially they stopped the flow, and they gave themselves a year because you could have used this program for 1 year. You give them the bonds, they give you money, but you have to pay it back in a year. So that's kind of the bank term funding program, and now it's coming up for renewal on the March the 12th of 2024. In a few weeks, they have to decide: are we going to roll this program, or are we going to sunset this program? And so my essays, I've written 2 essays kind of about this as well. What are they going to do? They haven't told us yet. Are they going to renew it? Are they going to let it lapse? It's kind of been radio silence. I think someone on Twitter, technically on the last day before the program ends, all the banks could rush in and tender all their bonds to get a bunch of cash that'll last them out for a year. We'll see if that happens. But as of right now, the program's about $160 billion has been taken out of the bank term funding program. There's a bit of a funding market arbitrage that you can essentially arbitrage the Fed using this program. So I guess you're probably looking at about $100 to $120 billion of actual usage of this program, the people who needed to fund deposit outflows, which is, it's a lot of money, but the unrealized losses on the bank's balance sheets, it's like close to $800 billion, right? So not everyone's using this program yet because they don't want to. And because they don't want to tell their investors, hey, I use a bank term funding program. That kind of means you're fucked, because what happens when that runs out, and if they don't renew it, then do I really want to own your stock? So I think there's a little bit of that going on. Why you didn't just swap the whole unrealized loss and tender it back to the U.S. government? Because you were worried what happens when it ends. And then if I telegraph this to my investors and my shareholders, and I've got to disclose this, what does that mean for my stock price once they start worrying whether or not Yellen and Powell are going to renew this program? And so that's where we're at right now. It's like, we want to know as a market, what are you going to do about this program? They're not really addressing that. They're talking about tapering of quantitative tightening and maybe a rate cut here. And I think there's some chatter about ending the conservativeship of Fannie Mae and Freddie Mac, and they can use that to gross up the purchases of mortgages. So there's all these things that they're talking about, except for the thing like, hey, we use this program to save the banks. Are we going to renew it to let them have access to it if and when they've come into a negative situation?
And what do you think? Do you think they're going to renew it or no?
I don't think so. I think it's an election year. Bank bailouts are not good politics. And so unless there's a financial crisis that forces them to come up with another solution, and I think the solution this time will be rate cuts and stop quantitative tightening, which means the reduction of the Fed balance sheet, and go straight to quantitative easing. And that will solve the problem at the fundamental level, which is getting interest rates to go down to a level where the banks are profitable again. So I think they need a crisis to get there. They can't just do it, right? Because they needed the political cover of fear of the populace for them to say, yes, we need to bail out the banks again. That's my bet. And I think that's going to happen sometime in March. And I think that's what Bitcoin is telling us with the fall from 48,000 to close to 40,000 right now is, hey, something coming up over the near horizon that's not very good for the general financial system. Now, obviously, I think Bitcoin's going to rally past that once they're going to print the money that they're always going to print. But I think it's a short-term wobble. That's what Bitcoin is telling us. But the S&P is saying everything's great, right? It's all-time high at 4,900 or whatever it is right now. Same with NASDAQ, 18,000.
Wait, so why would Bitcoin reduce? Why would Bitcoin reduce because of the end of the BTFP and the equities stay where they're at?
So generally, and I'm sure many of your readers or listeners have experienced this, when there is a financial sell-off, you sell what you can, not what you want, right? So if you have liquid stuff on your balance sheet that you can sell in a massive risk-off scenario, you sell it. Even though Bitcoin has a pretty much zero correlation with stocks and other assets, it's liquid. I can sell it immediately. So if I'm facing margin calls, can I sell the liquid office building that I own? No, but I can sell my Bitcoin, I can sell my stocks, I can sell my treasury bonds or whatever it is, right? And so it's a correlation one moment with any liquid asset. Everything goes down no matter what the historical correlations were between these assets. The dust settles, and then the stuff that's actually uncorrelated or very loosely correlated will then react in a different way. So I think Bitcoin is forestalling a correlation one moment on the downside for the general markets as we price in this uncertainty around what are the U.S. policymakers going to do about the rotten U.S. banking system.
Right. And so what do you think will happen to Bitcoin price if they do the Freddie Mae, the Freddie Mac, Fannie Mae conservatorship? Does that affect us in any way?
Well, it's so I read Luke Groman wrote in his recent piece something like they have the capacity to absorb, I think, $4 to $5 trillion worth of mortgages, something like that. I'm gonna play in it once I'm a little bit more comfortable, and maybe I get a price, and maybe I just have to buy this fucking asymptotic shark. But it's generally it's a bailout, right? Because they're allowed to. It's like China, right? There are these government guaranteed organizations that aren't really government guaranteed, like pseudo government guaranteed. So they privatize the profits and socialize the losses, just like China, and you can make a lot of money doing this, and they can essentially claim there's a private company that's buying these mortgages, not the U.S. government. It's not the Chinese government. It's a private company. It's not on our balance sheet. It's on their balance sheet. If they fuck up, they fuck up. But obviously, we know what happens if they fuck up. The government goes and bails them out. So if they're able to expand their balance sheet by $4 to $5 trillion to buy mortgages, that doesn't go in the Fed's balance sheet because everyone's looking at the Fed, not looking over here. And so it's just a political shell game of optics that they play. But at the end of the day, it's money printing. So yes, if they end that could be another $45 trillion US dollars of liquidity added to the markets, which will be used to buy mortgages.
Which would go through real estate, actually.
It'll go through, and it'll pump U.S. real estate prices.
Interesting. And what is that? What is the what is your price guess or target for Bitcoin before, let's say, like at the end of March or beginning of May? And then what's your thought for Bitcoin at the end of the year or next year?
I think we'll be in the 40,000s, chopping around in March before the halving. End of the year, my target still, we cracked the all-time high somewhere in late December of this year. And then
I think in
25, 26.
Your article you said 30 to 35. Is that in the short term?
Yeah, in the short term. So if my prediction works out and this sort of little mini crisis happens, I think we go down to the low 30s. And Bitcoin bottoms first, then the S&P and Nasdaq, and the rest of the major global asset markets roll over, except for China, because China's got its own cycle working on over there.
Right.
Everything else rolls over. Everybody panics. Bitcoin rises as panic happens, because what happens when they panic, they cut the rate, they print the money, and then we're off to the races again. So I think it's a very, very short-lived trading window if it happens. So if I'm right, I might have a few days to get out of my puts. If I'm wrong, whatever, I lose some money on the options that I bought, but I'm so long fucking crypto anyways, it doesn't matter.
Right.
And we just keep stair-stepping higher.
Yeah. Yep. And so very bullish on Bitcoin, very bullish on all of crypto still with the halving coming. This is just basically a step function going up and down because of local politics. And do you think the election, how dramatic would the election of, let's say, Trump, RFK, or Biden affect your thinking about macro, and how would that affect all this thinking of yours?
I think, as I said in my last article, American politics is a circus, and here are the clowns. They're all
Yeah.
clowns. I don't care.
Right.
They're clowns with different hats on. They appeal to different demographics, but they're all fucking clowns. There's not a single one of these presidential candidates that has stood up there and said, we've took on too much debt. I can't pronounce his name. Milei, the guy in Argentina.
Milei in
Yeah.
Argentina.
There's not a single one of them who's
He's
got up and said,
crazy
hey, guess what?
when he's on a podcast. He's crazy.
It's like, I'm going
He's
to cut
dropping F-bombs all the time also.
Imagine if like Biden or Trump or RFK or Haley or whatever clown is talking. It's like, I'm going to stop Social Security and roll back benefits to the 1980s, and I'm going to move the defense budget back to where it was in 1950, and I'm going to delete the TSA and Homeland Security
The
and
central bank. He said he wants to shut the central bank.
Yeah. Imagine if any one of these Muppets running for U.S. presidential election said that, or any of the Muppets running for European Council said that, or any of the Muppets in wherever, the country that you're living in said that kind of stuff. Let's roll back the government to where it was before we believed in this neo-Keynesian bullshit, right? Not going to happen. No one's saying that. So no one's addressing the real problem here. And so they're all just playing around the edges of the Fed and the central bank's going to print money, and I'm going to hand out money to this group, and I'm going to and vote for me. And another says, I'm going to hand out money to this group, vote for me. And so it's all about who's going to take their money, print their money, which demographic or which constituency they're going to hand it out to. And that's essentially who you're voting for. It's the root of the problem is not being addressed.
Right. So you're still allocating to crypto primarily because of the way that all this money printing is going. Like, you don't think of other asset classes in your like family office or in your investment mindset, considering all this.
The problem with other asset classes, yes, you can be a stock picker and you can do really well. I don't have time for that. Not really my forte. But the problem with other assets is nothing has outperformed crypto. Put up a chart like, as a broad-based sector, like S&P, NASDAQ, MSCI Europe, MSCI China, pick your market, doesn't matter. Nothing's outperformed crypto. So if the trend is they will print money and assets go up, then I should own the asset that goes up the most. I don't want to own the asset that goes up kind of the most, because I've kind of shortchanged myself. Yeah, great. I made 40% a year on the S&P, but Bitcoin did kind of number 500%.
One-ish. Well, I kind of number 5. Okay.
Yeah. So I want to buy the thing that's performed the best, and Bitcoin has performed the best, and central bank, the basement of the fiat currency complex. And so that's why Bitcoin and crypto is the only thing that I care about, because it's the only thing that's done the best.
Okay. And so in your second article, you started mentioning these crises, first crisis, second crisis. What are these crises?
So the first crisis was March of 2023, and that was the U.S. The three banks going under, and then the BTFP was created. Second crisis was essentially in September of last year. The Fed was like, hey, we've done all this great work. We've raised rates, and we're going to let the bond markets do our work for us. And everyone's like, I don't know if I agree with that. The U.S. government is printing record deficits. They were involved in one war at the time, and then there was a second one a few weeks later. Now we're in a third one. Um, that's inflationary. But the Fed, who's the government's going to keep borrowing money unless it's expensive. So the Fed should just keep raising rates until it's too expensive to do these things and safeguard the value of the US dollar. That's what I want. If I'm a US dollar debt holder, I want the Fed to be very active saying, hey, I can't tell the politician to not do social programs, but if you want to, build a new hospital, cost of carry is 15%, whatever it is, right? Do you want to build that hospital? Yes or no, right? Until I make that decision. That's what the price of money and interest rate does. It doesn't tell you what or not to do, but it just focuses your mind on, does this actually make any sense with what society views as the price of time? So if they're not going to do that, well then, why the fuck do I want to own 10 and 30-year bonds? And so we had this essentially massive sell-off in long-end treasuries, bear steepening, which is very, very bad for the financial system. And Yellen panicked. And November 1st, in the Treasury's quarterly refunding announcement, she basically did a $1 trillion US dollar money printing exercise, which said, hey, the market really wants Treasury bills, which is less than 1 year maturity. I'm going to issue majority of those to fund the government as opposed to coupons, 2 years plus. And because of the way the financial architecture in the U.S. works, there's a reverse repo program, which is basically a pool of cash that's just earning money at the Fed at a rate. The Treasury bill rate is now higher than that, and higher enough to convince a money market fund that, hey, I'd rather just give money to the U.S. government versus the Fed. Technically speaking, the Fed has a lower credit risk than the U.S. government because you give money overnight versus 1 to 3 months or whatever it is.
Right.
So the money comes out of the reverse repo program into Treasury bills, which pumps money into the system. And so we've gotten, through about $500 million of that, have another $500 million to go. And this was basically Yellen just determining where she borrowed money for the government. And that's why risk assets from November 1st, and you can look at the charts, bottom sell-off was fucking crazy. November 1st announcement of this is what I'm going to do with how I fund the U.S. government. Every risk asset, except for China, globally, rallied. Dollar dumped. Everybody's fucking partying like crazy, right? Into the year,
right.
All-time highs, boom, right? And we're still in that because the reverse repo is about $600 billion right now. And so that'll go down to zero. And more money will be injected into the global economy.
Wow. That's going to be a big effect. What about the and I guess as we transition, I mean, this should be a crazy year with the election and with all the different various things. I think you also mentioned, just to stay with the article a second, you mentioned the shipping transport stuff. Do you want to explain that a little bit? How does that affect the macro environment? The fact that there's these wars in the Gulf and the.
So one of the major, I think there's 8 choke points of shipping is I can't even pronounce it. There's a Red Sea port, I think Bab el Madrid or something. I can't fucking pronounce it.
In the Suez
so
Canal.
it's a choke point, and it's basically right on the coast. Bab el Mandeb, and it's basically between Djibouti and Yemen, right?
Yeah.
And so I'm a global ship, and I'm basically sailing either from Asia to Europe or Europe to Asia. You go through the Suez Canal and then through this point with merchant ships. Fine. So the Yemen Houthis, and Yemen basically is, I think, 2 or 3 different factions who are vying for control of this country. The Houthis are probably the most powerful one. They have a brand of Islam which dates back to, I think, the 7th century. Forget the name of the caliphate that they sort of support after Muhammad died. Obviously, everything split, and they're one of the factions. And they're very committed to, I guess, waging war against things that they think are right? And that's just in the culture in terms of and how they think. And so they are very against the Israel-Gaza situation. In their view, Israel and Netanyahu are committing genocide on the Palestinian people, which is aided and abetted by the United States and Western Europe. And so therefore, they're like, well, we have control of this very narrow strip, and you need to sail your ships through here. We're going to wage asymmetric warfare on any ships that are flagged under Western powers, which essentially means US, UK, France, blah, 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 right? How do they do it? They have very cheap drones. Some analysts say that they're produced out of Iran. Who knows? That's just what the Western media tells you. And for $2,000, $3,000, $4,000, they can essentially equip a drone with some sort of explosive payload and incapacitate a $100 million shipping vessel. In response, after a few attacks, the large shipping companies obviously were like, well, fuck that. We're not going to sail through here. We will have to reroute all traffic around the Cape of Good Hope in South Africa, which adds, I think, 10 days of sailing time and umpteen, hundreds of thousands of dollars of cost to get goods
and time
to where they want to be. And time, right? Time and price, more oil, blah, blah, blah. So that's very bad, right? Because if you think about the inflation that was happening in 21 and 20 in the United States, at least, it was basically driven by global COVID policies in mostly China and the US, as opposed to how workers were allowed to work, and vaccine policies meant that there was a shortage of labor and ships weren't being processed on either end of that spectrum. And that led to goods inflation. That led to cars trading above list price. That led to, washing machines selling out, shit like that, right? Because you couldn't get the parts, you couldn't make stuff because stuff couldn't move on ships fast enough or be unloaded through the ports. So instead of a labor shortage, this time we have essentially a small group of people waging asymmetric warfare, right? It cost them $2,000, them being the Houthis in Yemen, $2,000 to possibly incapacitate a $100 million ship. It cost the Western navies $1 to $2 million US per missile to defend it. So just do the math. It doesn't make any sense. You can't win this war. They don't even have to ever hit a ship, just by making you being the U.S. Navy or whoever Navy try to defend this. They're gonna go bankrupt. They're gonna run out of munitions, and it's just gonna be so expensive. So this is just asymmetric warfare. And what do shipping companies do? The economically rational thing, which is, you know what? Let you guys duke it out, do whatever you got to do, but I don't want any part of this. And so we're talking, possibly 20 to 30% of freight traffic. And we're already seeing the numbers nosedive in terms of the amount of tonnage going through that port.
It's probably insurance company. It's probably insurance.
Insurance companies too. Like, well, if you want to insure a ship, you want to go through Suez. Straight. Yeah. Hey, it's now, I think the rate that I heard, I think Jim Bianco was talking, it was 0.02%. Now it's 1% value of the cargo. So this is the jump. Shit. If you want to sail through and you want to get insurance, that's how much it's going to cost. Guess what happens if the Houthis ever have a direct hit on a ship? That's, I think I just read an article this morning that there's a ship being escorted by a U.S. naval something, and they still attacked it. Now they didn't. I don't know if they hit the ship or not, but they're like, "Fuck it, I don't give a fuck. You want to sail a big ass ship next to the drone? It's like great. It's a fucking $2,000 drone. I'll thousands of them, right? I only have to win once. You got to be perfect every single time." And so ships are like, "Well, fuck this. I'm not going to sail." What's the problem with that? Now, it's not going to lead to inflation today or tomorrow. It's going to come on the back end. And so if you're the Fed and you're like, I want to print money to juice the stock market so that Biden gets reelected.
Commodity costs will go up because the shipment and the letters of credit for the commodity and the insurance are all going up. And
and so then the goods don't get to where they need to be, and then it shows up in the inflation statistics, and then the average voter's like, what the fuck? I can't, get my Lululemon hot pants or whatever it is.
Those are a big part of the CPI now, the Lululemon hot pants.
Yeah, I'm not voting for the incumbent party. I'm voting for the other guy. It doesn't really matter who the other guy is. Could be Trump, could be RFK, could be whatever clown is up there. It doesn't really matter. But it's just not the clown that's in charge right now. And so that's the problem, is that if they really want to print, they could be backloading an inflationary problem right in time for the election when this shipping snag really could impact inflation statistics. And it doesn't look like the U.S. military is going to stop their support for Israel. So I don't think that, this situation is going to be resolved anytime soon. And so that's kind of the shipping situation.
And the inflation statistics are a bunch of muck anyways, right? I mean, they don't, I think you mentioned the CPI. Like, what is this? Like, how do we even track inflation at the moment?
It's some like basket stuff that they determine is the basket that the average person has, but everyone has a different inflation metric. There's no true inflation. Everybody's consumption basket is different. And so the inflation that you experience is different than what the government tells you is inflation.
Well, I don't wear Lululemon hot pants, so that's not in my inflation bucket.
Oh, yeah. Maybe you buy too many mezcals though. I don't
know. Could be on the slope. Yeah. Too many.
But yeah, so in the government and obviously the methodology of these CPI, at least in the US and other countries as well, changes over time. Because they say, oh, the basket of goods has changed, or the weights has changed, or we should update, and blah blah blah, right? But obviously, it's a very politically motivated thing because there's a lot of payments of the government to people. Like, imagine you're an old person and you get in the U.S. Social Security or Medicaid. The amount that you get is tied to the annual inflation rate. So, if the government prints a high inflation rate of a very aging population, then they have to pay a bunch of money to old people. But if they undercount the inflation rate, then the amount of money they pay is less. So, what do you do as a government? You undercount the inflation, and you try to do whatever you can to make that rate go down because you don't have to pay as much money to all these old people. So if you look at least in the US perspective, there's a site called Shadow Stats, and they have a chart of using the 1980s basket and the 1990s basket. And they say, what would inflation be today if we used these baskets from, a few decades ago? And it's multiples of what I think it's like between 10 and 15% right now. And it's come down from like 20 something percent. So and this is why Biden's losing to Trump in the polls. It's
because they feel it. I mean, the young people feel it because they're, they have much less cash, and they don't even have the inflation that like Sailor Moon talks about, asset category inflation. The very in demand assets are inflating much more, and those like as plebes, as you call them, are screwed.
Yeah, and so they're like, well, fuck this. I don't like this clown. I want a new clown. And so essentially that's why
so we're in
the
new clown, the clown shopping. We're clown shopping right now.
Yeah, exactly.
And it should. I think it seems like it will make a big. I mean, it seems like there could be a lot of more strife happening over the next kind of 6 months because of the election. I mean, like just nothing makes sense in the way that they're running for the election. The Democrats for the Republicans. There's just so much like lawfare going on and whatnot. So we can't predict much.
Yeah, I mean, it's just like every other country, right? It's whatever the political party believes that the voters care about, they're going to try to do. So if it is, I need to look hard on security, and so I need, if a bunch of people in the desert are launching $2,000 drones, and I'm going to launch a fucking Tomahawk missile, these motherfuckers, right? So I look big, bad, and strong, and everyone's, oh yeah, we're going after them, right? If that's what you need to do, that's what you're going to do, right? Not even if it makes no fucking sense. If that's what's going to get you elected, then you're worried about the consequences later, and so. That's politics.
Yeah, I think it does not feel like there's. I mean, it's one of the nice things about the Bitcoin, having Bitcoin in the Bitcoin community is it feels like we are like, even though there's all this strife happening and it's painful for a lot of people. So I have a lot of empathy for the situations, but it does feel like these clowns are just throwing mud and spaghetti all over the place. And because of Bitcoin, we have this kind of like feeling. I don't know if you have this feeling like we're backstage and we're watching the clowns on the stage make a performance for all the people in the audience. But we see that it's a show. And Bitcoin, this kind of like ability to separate ourselves from the monetary system and separate ourselves from all the craziness in the stats and numbers. It gives us this kind of feeling of paradigm.
Yeah, and if we believe, we obviously believe that our system is better or more equitable, or at least different, that fits with the times, and so we are confident that our money is not just being evaporated, right? So
it can't be.
There's that.
It won't. I guess it won't be evaporated. Bitcoin is Bitcoin the most liquid asset in the world? I think besides U.S. cash, I guess not.
I don't know. That's an interesting question. Like, what, how do you define liquidity? Like, how much you need to move for it to be considered liquid? I don't know.
Right. I guess it's
it's up there. It's like you can trade it for stuff 24/7, right? As opposed to the dollars, the yen, or whatever fiat in your bank account, it can be used, in most places, Monday to Friday.
Yeah, I think that 24/7 aspect, but that you get with like Tether and the stablecoins as well, right? So.
But those ride on crypto rails, right? Tether is a US dollar that rides in crypto. Great.
Yeah, it has all the benefits. It has the benefits of Bitcoin with the negatives of the empire. If the empire falls, then Tether falls as well. But for the most part, it's I kind of a stablecoin maximalist in that it feels like stablecoins should grow dramatically coming soon. What do you think of stablecoins? I think we chatted offline about this before. Like, what is your feeling of stablecoins and how they fit into the universe?
So I think, again, we have two systems. The fiat system isn't going anywhere anytime soon, right? We have a large
Nope.
percentage of the global population who likes fiat. They understand it. It makes sense for them. They've got a lot of assets in it. They're not going anywhere, right?
Right.
My mom is not going to be using Bitcoin, period. End of sentence. She wouldn't even fucking,
Sure.
use
She doesn't have a
online
Lightning
banking during
wallet
COVID.
down in El Salvador right now.
She wanted to go to the bank during COVID and, put a fucking check in the bank because that's how she operates. Fine, whatever. Do what you got to do. And so we have a lot of people in the world like that. So there's the fiat system, and we'd like to use some of the fiat assets in crypto, right? If you want to hold a dollar token, why do we need you to go all the way back to the bank? Why can't you, trust some centralized intermediary to hold these dollars and then issue a digital crypto receipt? And that's what Tether and USDC and all these other stablecoin issuers are. And it's a great business. Tether makes, I don't know, fucking $5 billion US a year free cash flow at these rates. Good on them. Like, I wish I owned that business. My fundamental problem with Tether and all stable coins that rely on the banking system is that for these to work, there must be a TradFi bank that allows you to hold all these dollars and treasuries in their bank. And if you take a look at Tether, I think I saw some report they're like the 16th largest holder of U.S. treasuries, something insane, right? Like,
yeah, I heard it was
bigger than
21
most
and now it's
countries.
16, so it's going up fast.
Right. So they are part of the financial system. Yet, if you look at it on a per employee basis, how much free cash flow they generate, they're probably the most profitable financial institution in the fucking world. And so you've
Probably
got
history.
but they depend on TradFi to exist. So if I'm TradFi, I'm like, these motherfuckers make so much money, and if I don't give them a bank account, they literally go to zero immediately. Their cash flow goes from whatever it is to zero because they need somewhere to hold these dollars. Why
Is there
can't I get
one
on
that
that
doesn't
on that
depend on the
business?
bank? Is there one that doesn't depend on the banks? Is there a stable coin that doesn't?
So obviously, I've Maelstrom. We're a founding advisor of Athena. Athena is a stable coin which uses the ETH staking yield and the basis of ETH US dollar perpetual swaps on crypto exchanges to essentially create a synthetic US dollar
On
peg that are
decentralized
well-guarded. And
exchanges.
right now it's mostly on centralized crypto exchanges, right? So it's not like it's decentralized. It's just that the risk is that the crypto ecosystem decides that they no longer want to use Athena's product versus the TradFi system, which we hate and we're trying to disintermediate. But using Tether
The
and
name of the
USDC and all
podcast
these
is
other ones.
Transform. We want to transform.
Yeah. And it's like, well, I'm trying to disintermediate you and render you obsolete. Yet for this token to work, I need to use your banking rails. And guess what? I make more money than you. And so at a high level, I'm like, well, of course Jamie Dimon or any of these other TradFi bank CEOs wants to do this business. Now, I don't know why they don't do it. Maybe there's some sort of political situation going on in the U.S., and which is why they're
I think that they will. Like, I mean, I was talking to Brian Layer Zero. I was talking to a couple other people. I mean, I think the general feeling is that everybody will have their own dark pool coin. Their own, stable coin eventually.
Yeah, and if JP Morgan launches their own stable coin and allows anyone in the world to use it who passes whatever their controls are, why would I use Tether? Right? And imagine if these banks said, okay, well, Tether pays you 0% of their net interest margin. I'll give you something because I want to take their assets, right? Or whatever reason, Janet Yellen wakes up on the wrong side of the bed and calls up the correspondent bank of Tether and says, I don't like that you bank Tether. Now, it's not illegal. It's what they're doing. But Janet Yellen doesn't like
the
it.
U.S. government never does anything illegal. What are you talking about?
Yeah.
Only things totally sanctioned by Congress that is never illegal.
Yeah, and so then you just shut off the account, right? So I think it's a great business. I wish I owned it, but there's a fundamental flaw because I think it relies on the ecosystem that we want to replace to allow it to exist, and that's why I invested in something like not invested. I'm an advisor of Athena, and I think
you're invested. Like
that.
You are invested.
I'm invested. Yes.
Yes, you are invested. The Arthur Hayes brand is invested.
Yeah.
But I guess I think the laws are going to bite the banking system in their butt, though, because they're going to pass these laws that say that your stablecoin has to be 100% backed, and then consumers will be like, oh, I have this 100% backed place to keep my money versus my 0% backed or the super banks, and then all of a sudden the super banks will have them, and then you'll have this kind of like these products that are conflicting, and then it could get very dicey and interesting. But and then the state, but I think it seems that the U.S. government, if they pass this law, or if the European Union does it, or Switzerland, they're also basically creating lenders for themselves, right? Because if stable coins go to a trillion, you have $1 trillion of of money that's just sitting there borrowing from getting the risk free rate on a regular basis, which is basically a borrower from the government, right?
Yeah, and this is the problem with CDBCs and the central bank digital currencies. There is a dilemma that the government faces. The best CDBC would be for the Fed, the ECB, BOJ, PBOC to say, guess what? We have this thing called technology, the
Yep.
internet. They don't even have a data fucking base. And we're going to allow you, the
They have
citizen,
rocks on stones. Like, oh, come
yeah,
on.
for the first time in ever, we're going to let you bank directly with us. So no credit risk, right? Bank directly with the government. Hey, guess what? We're risk free in our own currency. And what are people going to? Yeah, that's a great idea. Why do I have to worry about if my bank goes under? They do dodgy shit or blah blah blah. I can just bank directly with the government, right?
Yep.
And I've got this token and I've got this app, and it works really really well because everybody uses it and everybody pays their taxes with it. It's seamless. I don't have to fucking fill out tax forms.
I don't need to
But
participate
then
in society. I'll just stay in my little box at home and or
and
my
then what happens to
CBDC.
all the commercial banks? They go out of business because they can't
Yep.
compete with the government. And so the stablecoin issue kind of brings this situation into very clear clarity is what does the government want to do? Do you want to make a really sound banking system? Because we can do it. We don't even need blockchain technology. We have database and the internet
Yeah.
and smartphones. And the government can make a very, very safe banking system in fiat and completely just cut out all the commercial banks and all the shenanigans that they get into. But then obviously the commercial banks are very, very politically powerful. They no longer will have a reason to exist because the government can allocate credit and do everything they want programmatically, however they want to do it, right? Good or bad. And
Yep.
so I think this is the dilemma that they're facing is because they don't want to attack the political power of the banks, and this is every major central bank globally, they're rolling out these inferior products. And these inferior products are not competing with something like a Tether or USDC
No,
because
nobody wants that. It's a product that has zero product market fit.
yeah,
Well, it
I
has
want to
some
bank with the
product
Fed.
market.
So
You
right now
don't
I can
want
do
to,
that with the money market fund, or I want to bank
right?
with the PBOC, right? Or I want to
Well,
bank with
actually,
the ECB.
you just revealed something to me, which is that the stablecoin world is perfect symbiosis with the Fed because it creates a lender uh, to the Fed, right?
Right,
Not
it
CBDCs,
does.
not CBDCs.
Well, CBDCs they can just force you to buy treasury anyways. It's on the same balance
Okay,
sheet.
they
So
could kind of
again,
make their own.
that's the and so they're in this dilemma, which is the commercial banks like, what the fuck? Tether's making $5 billion of free cash flow, and like, I don't know how many millions per employee that they have on payroll, maybe billions per employee. I don't fucking know. And and then but then Tether is turning around and buying treasuries, and I'm like, oh well, that kind of helps me as government. I don't know if I really
Yeah,
care if you're pissed off, Jamie Dimon, right?
right.
So this is the dilemma they're facing, and they're rolling out all these like cockeyed bullshit rules because they're trying to ride two horses with one ass.
Oh, I have a question. What about I just saw last week that that BlackRock said that they're filing the application to allow options trading for their ETF. Do you think that's an important issue, or why would they do that, and why would they fast track that as an SEC? Like, what is the purpose? What does your macro brain say about that?
So if you're familiar with the U.S. market, there's something called zero-day options. It's essentially these very, very basically a lottery ticket, and you're essentially having an option that expires on a day in a week. That's a sort of time frame. These are the most popular. They launched, I don't know, 18 months ago. I'll back up for a second. The reason why it took so long for them to launch these products, at least, is because
They
the
being who?
CBOE,
Oh, CBO.
Chicago Board of Options Exchange, does not have real-time margining yet. Real-time intraday margining. Let that sink in your brain. These motherfuckers can't even tell you how much money that this multi-quadrillion system is flinging back and forth on an
That's
intraday
because they have a
basis. They're
third
just
party that does the margin calculations, which they do it by hand.
and they send you around a fucking PDF at the end. These motherfuckers can't do real-time margining, or they don't want to. Whatever it is, doesn't really matter. And so that
They
was
didn't
holding up
discover
the
your
zero-day.
the liquidity, the liquidation tools.
Yeah, so this is what was holding up the zero-day options up until now. And I guess at some point the dealers were like, well, fuck it, we're just going to do it anyways. And so essentially, if I am a supplier of volatility, meaning I'm a writer, so if the retail wants to buy lottery tickets, so they're buying buying options. The sell side, like Citadel and Virtu and Jump and DRW and all these very sophisticated trading firms, want to sell retail overpriced volatility, and then they go and they hedge it in the spot, and you do the math and it works. They make money, right? So the zero-day options, if I'm a Citadel, I don't have to post any intraday margin because they don't know how to margin it. They can't do it. So I basically get to write infinite amount of options. Nobody's checking how much collateral I have versus these options. So it's a market that's ripe to blow up. I think that Bitcoin could actually blow up the U.S. financial system by a massive 50%, 60% spike in a day on a big 0DTE expiry, which completely bankrupts a firm like Citadel or Jump when they get into these things. But I'll
I
leave that
see you
for another
getting
call in the
excited about
future.
this. We want to see this.
I think it's be hilarious. It'd be so ironic. But essentially, these are the most highly traded options in the biggest options market in the world, the United States. Or maybe it is. I don't know if India and China have a bigger options market. Anyways, it's very liquid
It's
and
big.
it's big. And so if they get these options listed and you get 0 days on Bitcoin, you essentially get highly leveraged Bitcoin ETF trading, which obviously leads to massive flows in the secondary of the ETF and massive flows on create redeem, right? Which is just creates fees. Everybody makes fees. Retail's happy because they get to fucking go YOLO long puts and calls with 100x gearing. The market makers are happy because there's dumb retail overpaying for volatility. BlackRock's happy because people are creating, redeeming, and paying fees. And the stock exchanges are happy because the flow on these products is just enormous, right? And so that's why everybody wins with 0 day on DTE options, and that's why the BlackRock and all of them will be pushing to have these things listed as soon as possible. And I don't see any reason why they wouldn't be. And so if you're a very sophisticated options trader, what you can do is if you have access to say crypto exchanges trading options that are non-US, and you have access to CBOE, so your 0DTE, is you're going to see massive dislocations in the volatility term structure between what the Bitcoin ETF options listed in the US are implying versus what Bitcoin is implying outside of the
So
US.
you
And that's
you
going to
basically
be
have two arbitrage accounts. One is CBOE with his ETF options on BlackRock's ETF, and the other one's like a Deribit, offshore
exactly.
Bitcoin options, something like that. And then you just arbitrage them with your system.
Exactly.
And you think that's going to come soon? But
I would imagine. I
why?
mean,
But why did BlackRock want those options out? Is it just because they think they can make more money?
liquidity. It's liquidity.
Liquidity.
So if the hedging, if you want to do a dynamic way to hedge your gamma on these 0DT options, you're going to be buying and selling ETF shares all day long, and you might even have to create into the to the market, create a redeem again,
Are the
creating
zero
fees.
D are the 0 day options on all equities and assets or in ETFs or
I'm not sure. I've never really actually traded one,
okay?
but they're on most single stock names because I have buddies of mine who they wake up in the morning, they're in these chat rooms, they got a list of stocks. Okay, we think this one's going to do well today. They're going to beat the strike or whatever. It's fucking gambling. It's fucking fun. Everybody loves it.
It's just
Everybody's
like
happy,
Vegas,
right?
only not in Vegas.
Yeah, it's like,
It's like
oh,
a
I'm
roulette
gambling.
wheel.
I'm not gambling because it's a financial market. I think I'm smart.
They can actually have their own little roulette wheel with all the logos on it and just spin it
Yeah,
around.
exactly.
That's really funny. Cool. I know that you are near slopes.
I am.
Yeah, so I don't want to keep you too much longer. I know that. Is there anything you want to talk about before we kind of start wrapping up, or is there some key things that I should have asked you? Some incredibly smart question that I didn't already think of that that you think
No,
is
I think we
important.
covered a lot of ground and gave people sort of a great
Yeah.
market mind map. And maybe none of this shit comes to pass, but at least you thought about it.
Well, I think it's great. I mean, just kudos for all. I mean, your articles are fantastic. I mean, they're the ones that I look for the most. They bridge the two sectors, and me coming from originally TradFi and then being obsessed with this transformation that as we move to this kind of 24/7 marketplace, there's all these companies that you and I know so many of these different people, and it's just amazing to watch everything transform. To use our metaphor, but in real terms, I really like how we've kind of broken up a few different things. I think the listeners that are either running family offices or making investments as general investors, they can kind of see like, oh, here's a guy that's been around for the last kind of 7, 8, 9, 10 years in the space, and has a professional, investing background, and that's how you look at it. That's what makes you really special. I think a lot of the crypto traders don't have real trading, or they don't have trading backgrounds from trad markets first, and so that gives them these kind of offices and these people a better perspective. So I'm super grateful. Thanks for taking the time here.
Awesome. This is fun. Got to
Yeah.
spread the mind virus. Hopefully, we get more hodlers out there.
Yeah, we'll do this. We'll do this again at the end of the year when we see how the
Yeah, see
predictions
how,
were.
see how good the
We're going to
predictions
give
came
you a
out.
little scorecard, like,
Yeah.
Bitcoin went to 12, and
Yeah.
now it's at 200, and the volatility is magical. I mean, it's a whole nother world what we're doing here. So, have fun on the slopes. I wish I was there with you skiing. I will go meditate on the beach instead. But hopefully I get out there soon. And thanks a lot. Thanks, Arthur.
Thanks for having me.
So we just had Arthur Hayes, the founder of BitMEX and 100X, and industry luminary and avid skier, giving us comments on the macro environment and on crypto and on TradFi markets and on basically government action. So we're been a great time. Thanks again, Arthur, and we'll see you guys all next time.
Awesome.
Cheers.